Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 9th of December, 2023, and it's the weekly technical analysis for Euro, Cable, and the Aussie dollar for the second week of December. And as we look across all these pairs, they have already resumed its bearish momentum or retracement and have reached the support levels, some interim, some major support levels. So, and all due to only one major news last week, apart from the ISM services for the US, which came out better than expected. So looks like the US dollar has been attempting to recover. And the RBA announced that there's no change in their rate, so it was a dovish announcement, and that still pulled the Aussie dollar lower. And this week, we'll take a look on the outlook. With this coming week is a major week with 3 more major central banks announcing their rates. FOMC, of course, the Bank of England, and the ECB on Wednesday and Thursday. So it's going to be a very critical week, with along with your CPI data as well. So let's see what the impact was from the last week, and then look ahead for this coming week. Well, this week started off with the RBA maintaining their rates. They did not change, and as expected. And it was dovish for the Aussie dollar as that continued to weaken. And anyway, it was due for retracement after a strong move up. And US dollar is continuing its recovery with some support from the ISM services figures, which came out slightly better than expected. So that fueled the recovery for the US dollar, which we'll see later on for the DXY. Then the key one on the Friday, non-farm payroll jobs came out much stronger than expected. And along with the other hourly earnings and unemployment rate as well. So job market is still slightly strong, which may influence the FOMC for next week as well. So this coming week is a critical one, with all the major central banks announcing, and also US CPI coming up, and followed by the PPI. So slightly lower than expected, except for the PPI forecast is higher than the previous actual for November. So they're expecting an improvement in the PPI figures, and that may impact CPI later on. But the 3 central banks will likely not change rates. It's unlikely they will change, so they'll likely just leave rates as it is. And key will be to watch out what they announce or state during their press conference for the future, on how long the rates will be maintained, or whether there's a clue as to when they're going to start to cut rates, which at the moment is likely not as soon until the second half of the year, next year. So a critical week this week, and there'll be high volatility as expected, and we'll see what the price action is going to be for the US dollar. And also, all the major economies are announcing their flash PMI figures. at the end of the week. But all eyes on US dollar with these three major central banks announcing and together with the inflation figure. Okay, so we'll have to watch out for this next week. And let's go back to the analysis. Well, let's begin with the euro. And after spiking through the 110 round figure, strong resistance, and started to retrace back lower, and has already hit the 50 fib as of Friday with a spike down. Although it recovered back up to sit on the daily 200 EMA, so that's still a major support. But for now, let's shift this lower. The next major support now is likely going to be at the 62 fib retracement of this swing move up. And you can see here also the support levels here, which align with the 62 fib. So it has been bearish for the whole week, except once it hit the 200, it did bounce. But with the non-farm payroll data, it just dipped lower and still closed bearish. Let's take a look on a weekly time frame. And that was the previous week where it hit the weekly 200 EMA. That was the major resistance, just slightly above the 110, and then it's been retracing since then. So there's still likely another one more week of a bearish move and retracement back down into the 38, which is the 62 fib. Let's flip this around. That's the actual retracement. Interim support will be at the 50 fib, where it did spike through. And major resistance now, we can likely bring it down to the 109. Along with this intersection with the upper channel trend line. So we'll see if this has any impact from the support or from the lower channel trend line at the 50 fib again. But if it does, it could just spike down into the 62 fib. And of course, a lot depends on the FOMC and the ECB rate decisions this coming week. And there's also some major US news, CPI, PPI, and retail sales as well. So we'll compare this with the US dollar index to see whether the inverse correlation still holds. And here's the US dollar index, DXY, where it did recover and blocked by the daily 200 EMA exactly, and pull back on Thursday into the 103 round figure, and then bounce back up on the Friday with the non-farm payroll report, but still finding interim resistance at the daily 200 EMA and not able to reach the 104 round figure yet. And if we take a look on the weekly time frame, there's a possibility that there will be further recovery and retracement back up after this hammer on the weekly time frame, which resumed on last week. So let's adjust this. We can adjust this fib here now and turn it around for the retracement. So from here, it did hit the 38 fib retracement. And beyond that, let's mark the next significant resistance at the 50 fib. That's where this previous swing low was. So that could match up well. So there could be some pullback, and depending on these critical news for next week, we'll see whether there's going to be a continuation or just a consolidation. So the interim support now is going to be at the 21 fib along with the 103 round figure. Major support is still at this level at 102. All right, let's see whether this starts to look like an inverse head and shoulders pattern for some recovery. And we'll see whether it's able to break through the 50 fib and get to the 105 round figure. So all depends on the CPI data early in the week to see how much this potential pullback could be. And then, of course, the Federal Reserve's statements and announcements. All right, so with the US dollar recovering, the euro and all the major pairs along with spot gold has been also retracing back down. All right, let's go back to the analysis. All right, moving on to the cable, where it did also retrace back lower and right from the 127 round figure area and pull back to hit the 125 again on Friday with the non-farm payroll. It did try to recover somewhat, but still bearish close. And on the weekly time frame, let's take a look, and that's major resistance at the weekly 200 here. I just followed through with the retracement last week, and there could be further pullbacks this week. Let's see whether it goes to the 50 or to the 62 retracement. 50 is also, there's the weekly 55 EMA for support there. So critical week as well for the cable with the Bank of England announcing their rate decision, which they'll just likely just put on hold as inflation seems to be waning a bit. Right, let's see. We need to also move this to retracement area. Yeah, it's possible, and let's turn this around. And the major support is still at the alignment with the 255 EMAs, but there is a swing low which coincides with the 50-fib. So that could be the next major support. And now we'll see whether there's it has to break down below 125. Let's adjust this interim support now to the 38 fib, just above the daily 55 EMA. Major resistance is now going to be at the 127, and the swing high, the recent swing high. All right, so let's see how far the pullback is going to last, and where it's going to be blocked. If it does break down below the 50 fib, it could spike through to get to 123 to the next 62 fib area. And there's also additional UK data, GDP, before the Bank of England's rate decision as well. So another pair for this week that's going to be on a critical watch list. So all depends on the US dollar index as first, with the CPI and Federal Reserve's announcements. All right, so let's move on to the Aussie dollar. All right, for the Aussie dollar, it didn't quite reach the 67 round figure at the 786 retracement, when before it already started to retrace on the Monday. Pull back down into the 50 fib area. And there's still room for further retracement back down to the 62 fib. So let's see if it breaks down below the 50 fib into the 65 round figure. And at the moment, there's further support below these spikes here, just below the 62 fib. We'll see if it does spike down lower, it should find some support. From the 64, 60 or 70 range. Let's take a look on the weekly time frame. And it's first significant pullback, so it could be further bearish retracement for this coming week. So it depends on the US dollar price action. Now let's see if we need to adjust the fib retracement here. And on this smaller swing move, let's switch it over. And it did hit the 38 fib retracement. So this is still a valid strong support zone with the 50 fib and the 65. So this interim area is going to be at this level, right at this swing low for last week at the 38 fib. And the major resistance is right at the swing high, just below 67. All right. So another critical pair to watch out for this coming week with against the US dollar, Federal Reserve, and then a number of key inflation figures, and as well as retail sales on Thursday. All right, let's be watchful and be careful for this coming week. There's going to be increased volatility, so do trade safe. Have a safe week and a good trading week, and cheers for now.